Jim, what level of yields is too high too quickly?
Well, you bring up a very good point, Wilfred, because I think the possibility of rates that rise too fast, if inflation runs too hot, and rising oil prices, that combination is usually not good for the stock market. Overshoots on interest rates and overshoots on oil prices. And in answer to your question, where does it become an issue for a market? I think we probably start talking about it at 1.25% on the 10-year Treasury, and then we start really talking about it and maybe fretting about it at 1.5%. Now, before we get to that point, though, the underlying conditions, which is what you always want to look at first as an investor, are good. I mean, when you have stocks trending higher and they're being confirmed by a rise in interest rates and confirmed by rising commodity prices, particularly economically sensitive commodity prices like base metals, copper, etc., all these markets are confirming to each other, and we're not having a lot of internal divergences to worry about. So I think you point to something that we will need to worry about. We can talk about valuations if you want to, but if we get that combination of rising rates and rising oil prices that overshoot a little bit, and we could, because some of the inflationary pressures are going to be real. Rent prices are going up, even used car prices. A lot of the measures of inflation, the inputs that we see on the CPI are starting to flare up. So it is definitely something to watch, but right now I think we're fine.
Shepard Smith here. Thanks for watching CNBC on YouTube.